An agent who works for you. Get yourself a State Farm agent.
State Farm sells life insurance.
Tonight, it's never politics as usual on Equal Time with Mary Matalin and exciting guests. Tonight at 7, find out how to meet your financial goals on your portfolio. 7:30, Money Tonight helps you protect your hard-earned dollars. Then the Talk All-Stars kick off at 8 with the Dick Cavett Show. At 8:30, don't miss Equal Time with Mary Matalin and exciting guests. That's tonight on CNBC. We want you to join us as a member of our studio audience. For tickets, write to America's Talking Tickets, 2200 Fletcher Avenue, Fort Lee, New Jersey, 07024. Or call us at 201-346-6624.
This program is sponsored by the Burger Funds.
Good evening, everybody. Welcome to our Friday edition of Your Portfolio. It's Heavy Hitter Night. Glad you're with us. I'm Bill Griffith.
And I'm Jim Rogers. What a way to end the week, you know. The dollar got hit, beat up all over the world, but nothing that the big central banks could do, nothing that they could do about all the bloodletting. Stocks, bonds, everything took a huge sell-off as a result, and mutual funds, both small cap and mid cap, ended the week decidedly on the downside.
Yes, indeed, these are the dog days of summer for the dollar. Failure by the world central banks to prop up the greenback has fueled speculation that our Federal Reserve might have to come to the dollar's rescue by raising short-term interest rates again and soon. Mabel Jong has this report.
Currency traders in New York tried desperately to keep up with the frenetic up and down pace of the dollar as central banks around the world moved swiftly to try and halt its free fall, aggressively buying dollars at 100.8 against the yen and 159 versus the mark. While the coordinated intervention worked briefly, it was clear by Friday afternoon that it failed to push the sagging currency up against the Japanese yen. In an interview with KMOX Radio in St. Louis, President Bill Clinton expressed confusion over the state of the greenback and said the currency values are running in the opposite direction of economic strength.
This is a development that is puzzling a lot of economists because our economy is performing so well.
Even despite a final move by the U.S. Treasury Secretary, Wall Street was unimpressed by the G7 move and appeared ready to challenge its conviction to support the dollar. Stocks remained in a deep slump after the concerted buying spree.
Certainly a continued decline in the dollar would tend to limit any potential gains there, and I do think it points to further declines.
Treasury Secretary Benson indicated if the latest efforts did not succeed in strengthening the dollar, the U.S. and its allies would be prepared to do more. And it appears they will have to do just that with much more efficiency.
The intervention we've seen has been sporadic. I think it needs to be a little bit more convincing and needs to be backed up by some policy statements and by possibly some interest rate moves.
The recent attack on the dollar has led to increased speculation that the Federal Reserve will be forced to hike interest rates for a fifth time this year. But so far, the Fed has done little to confirm the likeliness of any further move. For Your Portfolio, I'm Mabel Jong.
What is your take? Is this truly, as some have argued this week, a lack of confidence on the part of currency traders in our own Federal Reserve, or do the traders just smell an opportunity to let this thing run?
It has nothing to do with traders. It has to do with investors around the world. People who own
somebody's selling dollars right now.
Through the traders, right. But it's insurance companies, it's the pension companies, it's the mutual fund companies, it's people around the world who realize that the U.S. government has no interest in keeping the dollar up. For years, they've wanted the U.S. dollar to go down, and everybody knows that. And once again, it's time to sell dollars. This has been going on for 15 years now, this beating up of the dollar.
Raising interest rates won't stop it?
Raising interest rates will help as a short-term thing, but the basic fundamental problems of the U.S. dollar are much deeper seated than that. We have a budget deficit which is out of control. We have politicians who don't understand and don't care whether the dollar goes down. In fact, they think it's good for the dollar to go down short-term because it helps in a short-term run. But we're here for the long term.
Just looking at the calendar, coming up in 2 weeks now, we've got a G7 summit meeting. We also, before that, have the Federal Reserve's FOMC policy setting meeting. Is it possible that they will try and raise rates during the FOMC meeting to try and show the G7 that they are doing something to try and stem this tide?
It is probable that the market will have already raised interest rates by then, and the Fed will follow. In other words, already Treasury bill futures are going down so much that the rates are going higher, and it's probable that the market will do it for them.
All right, well, certainly the chaos in the currency markets wreaked havoc on stocks and bonds this week. The prospect of a Fed rate increase to save the dollar renewed inflation fears and spooked the Dow into a major sell-off today. The Dow tumbled 62 points, but that was off its lows of the day, some 70-point loss earlier in the session. The Dow finished down 139 points for the whole week. The broader market, as measured by the Standard & Poor's 500, dropped more than 15 points this week. The NASDAQ, a barometer of activity in the small cap area, ended down 35 points for the week. And fears of higher interest rates caused the bond market to pull back big time. The benchmark 30-year Treasury fell more than a point today, but it was just shy of a point for the whole week. The yield rising to just over 7.5% for this past week.
One other thing that's going on is that people are trying to dump out their derivatives. They're trying to clean their derivatives.
We are coming to the end of a quarter.
Yes, June 30th is coming up, and CEOs around the world are saying, do we own any of those derivatives? And the treasurers are saying, we might have a few, but we won't have them long. So they're trying to clean them up before June 30th. And that's one of the reasons there's a lot of pressure right now.
Sort of a major expiration here.
Selling everything they can.
Well, the beauty about mutual funds is that amid all this volatility, there is some place to run, some place to hide, if you will. That is, if you happen to be in the right fund at the right time. Here's our weekly wrap-up of the best and worst performing mutual funds for the week. As inflation fears grew, so did the price of gold, and according to Lipper Analytical Services, gold funds were the biggest winners this past week ending Thursday, averaging a gain of about 1%. The rebounds in the Nikkei helped Japanese funds. They were up 0.75%. World income funds averaged a slight gain. European region and fixed income funds complete the list, although those two were in the negative. Meanwhile, science and technology funds were hit the hardest this past week. They fell an average of 5.5%. Another volatile sector was health and biotechs. They dropped as well. Mid-cap and small company funds suffered through a hammering of NASDAQ stocks, while capital appreciation funds fell an average of about 3.5%. Individual funds fared this way. In the open-end arena, U.S. gold shares made the top 5 list again, gaining better than 3%. A fixed income fund, the Dreyfus Strategic Growth Fund, rose about 3%. GAM Global was up under 2%. Dreyfus Capital Value B shares, which are heavily weighted in gold, were up 2.5%. The Ridex URSA fund rounded out the top 5. That fund is 100% short the S&P 500 index. Among the losers, this week's poor earnings projections for Lotus Development and the downgrading of Cisco Systems weighed heavily on science and technology funds. The advisor's Inner Circle Pin Oak Fund, which has large holdings in that sector, lost more than 13% for this week ending Thursday. Fidelity Select Software lost 10%. That fund is down over 27% year-to-date. The Arbor OVB Emerging Growth Fund, Seligman Communications D shares, and the Robertson Stevens Emerging Growth all fell nearly 8%. Korean funds topped the list of closed-end winners, according to Thomas J. Hertzfeld Advisors. Easing tensions in North Korea pushed up shares of the Korean Equity Fund and the Korea Fund. The Korean Investment Fund rose 6.5%. That fund was on the losers list last week. Hertzfeld's own Caribbean Basin Fund and ASA Limited, which is a South African gold fund, round out the top 5. One of the more volatile muni funds, the Minnesota Municipal Term Trust, led the closed-end losers with a drop of over 10%. Second was the Alliance World Dollar Government Fund. That has a large position in Mexican and Venezuelan debt. 2 other funds which invest in that area also took hard hits. The Latin American Equity Fund and the Mexico Fund each fell over 9%. And Commonwealth Associates Growth Fund ranked number 5.
And now it's time for an update on the 5 key commodity indices that I track each week at this time, every Friday, as you know. They help me try to figure out the prices of raw materials, and this information gives me a clue as to whether we're drifting towards an inflationary or a deflationary period. We see that this week, the Dow Jones Futures Index is up over 20% from the same period a year ago. Dow Jones Spot Index is higher by 14%. CRB Futures is up by 11%. Journal of Commerce is higher by almost 6.5%. And the Moody's Commodity Index is higher by 25% from the same period a year ago. That's one reason people are selling bonds and the dollar.
Those are inflationary numbers, by the way, yes. I would think so. Let's take a break, shall we? Imagine overseeing $35 billion of other people's money in this market environment.
And that's just what Peter Anderson of IDS Financial Services has to do. But through it all, he's still bullish. And if you want to know whether it's time to get in, get out, or stay out of the market, give us a call. The phone numbers are open, 800-752-CNBC. We'll be right back.
I'm Bill Berger of the Berger Funds. My 40 years of managing other people's money has taught me that the hardest step for an investor is often the first. At the Berger Funds, we've made it easy for you to get going. With low minimums of $250 to start, $50 thereafter. So whether you're saving for an education for your children, a new home, or a comfortable retirement, we'd like to help you move towards your goals. Choose between the Berger 100, a growth fund, and Berger 101, a growth and income fund. Both have earned Morningstar's highest possible rating, 5 stars overall. So you know they've been among the top performing mutual funds. To learn more, call 1-800-333-1001 and ask for a free investment fact kit complete with a prospectus. It has what you need to get moving towards your financial goals at your own speed.
You get anywhere with your retirement planning?
Not really. Any ideas?
I just plunked the bundle into the Husney Farrell Emerging Developing Global Balanced Biotechnology Fund.
You know, I'm in the Vasco da Gama Municipal Short-Term Convertible Inverted World Income Fund.
That's a keeper.
I'm sorry, I couldn't help it over here, but I highly recommend the Southwest Pacific Rim Tectonic Drift Emerging Continent Contrarian Uncomfortable Investor Equity Value Fund.
You should be in that.
Definitely.
What was the name of that fund again?
Tonight on Dick Cavett, Yankee baseball legend.
Mickey Mantle, is it?
Mantle.
Joins Dick for a little one-on-one.
Said, I'm going to tell you, the next drink you take might be your last.
Tonight on Dick Cavett.
It's the only nightly personal finance show on TV.
We help you make, save, and protect your money.
It's your money. How to save it.
And not become a victim of a con job.
Sue Herrera, Janice Lieberman, Money Tonight, Monday through Friday only on CNBC.
Tonight, hard-hitting news, hard-hitting talk on Rivera Live.
Now, mutual fund investors can explore the growth potential of today's real estate market. Introducing CGM Realty Fund. Managed by Ken Huebner, CGM Realty Fund seeks the above-average current income and long-term growth that real estate may offer. Call 1-800-CGM-REIT for a prospectus. CGM Realty Fund, the new real estate opportunity for mutual fund investors.
This segment of Your Portfolio is sponsored by Capital Growth Management, managers of the CGM family of no-load funds.
Welcome back to Heavy Hitter Night. Fear of rising interest rates may have the small cap stocks in the headlock, but Peter Anderson believes that they will come up for air sometime toward the end of the year. He advises investors to start buying them right now.
Yep, we've got a contrarian who's got his eye on a whole lot of other sectors as well, including technology and financial services. As Senior Vice President of Investment, Peter Anderson oversees more than $35 billion, that's with a B, in assets at IDS. That's double the amount 5 years ago. The company manages 36 mutual funds. Their assets are almost divided evenly between equity and fixed income. 9% is invested in money market securities. Let's say hello to Peter Anderson, Senior Vice President of Investments at the IDS Financial Services in Minneapolis. One of the great names in the mutual fund business, I must say. You were one of the original mutual fund
companies.
Yes, we
were. In fact, the company is celebrating this weekend its 100th anniversary.
Is that right?
Oh, wow.
100 years.
Happy anniversary.
Thank you, Bill.
Are we invited to the party?
Absolutely. Come right out to Minneapolis.
We are now.
No, I'm not going to go to Minneapolis. So, well, tell us now. We hear that you're bullish. The market's caving in. Does that make you bullish, or were you bullish before?
Well, unfortunately, I was bullish before, Jim. I wish I could say I just got bullish today. No, I think that I look at the market in terms of three basic building blocks. The economy, which I think is in good shape, valuation, which I think is terrific, and psychology, which is negative, and I like that.
Right. Now, you should explain to our viewers that you like negative psychology because...
Well, usually I think markets are at crucial turning points when people are unusually bearish, and at the moment I think they're very bearish, and we've got all sorts of indicators that that's the case. And going back to valuation, we got the market selling at 12.8 times earnings, and I think that represents good value.
Well, when you say 12.8 times earnings, you mean next year's earnings, not last year's earnings.
Absolutely. I'm talking about 1995's earnings.
Well, suppose those earnings don't come in the way...
Earnings.
Well, suppose those earnings don't come in the way. Suppose, let's just take the other contrarian view. Suppose that the economy goes into trouble next year. Suppose higher interest rates or inflation causes a slowing economy. What happens then?
Well, I think even in an environment with a slowing economy, Jim, we're looking for $35 now for earning earnings. Take 10% off of that. Look at $32 or even $31. In that case, the market's selling for about 13.5 to 14 times. The market since 51 has sold on average for about 14.5 times earnings. Take 10, take 15% off the number, it's still not an expensive market.
So I think you're bullish.
I'm bullish.
What are you buying then? And how do you, first of all, how do you figure out what to buy, and then what are you buying?
Well, first we've got a staff of 30 analysts who help us in this process, so it is a great assistance to us. Right now we're buying deep cyclicals, coppers, papers, aluminums, chemicals. We are buying, believe it or not, technology, and we're buying it in large size. And we're buying consumer cyclical stocks. We're trying to get in the path of earnings. We happen to be optimistic on the economy. We think earnings will accelerate. We're positioning the portfolio in the path of earnings growth.
And by deep cyclicals, just to explain to our viewers, what Peter means is the fact that if there's a strong economy, companies that will do very well just because people need a lot more steel and copper and textiles and chemicals.
And computer chips. You like Intel?
Yes, we love Intel. In fact, in recent days, we've been buying it fairly heavily, and in our pension funds, it accounts for almost 4.5% of our assets.
It's still undervalued in your view. I mean, how undervalued is it?
Well, on our number, for next year, we believe the company is going to earn on the order of $7.20, which means the company is selling for 8 times earnings. And I think it's one of the great companies in America.
8 times 1995.
Yes, Jim. 8 times 1995 earnings.
Why is that a distinction you're making there, Jimmy, as opposed to the trailing earnings?
Well, no, I just want to make sure everybody understands we're not talking about 94.
I'm asking, why is it a distinction to be made when you say it's selling at 8 times future earnings as opposed to 8 times trailing earnings?
Well, trailing earnings are a fact. We know what the trailing earnings were. Future earnings are conjecture. You know, analysts say there'll be X, Y, or Z, and whichever one is right makes money, and they sometimes change their minds. And I'm not disputing this estimate. I don't have a clue.
Jim's point's a good one, because the range of estimates with Intel is huge. We've got some folks at $5 next year, some folks at 10. We're at $7.20. But
you're taking the middle ground.
We're taking the middle ground, but by golly, I think we can go with 10.
Well, all right, so if they earn $10. One thing that bothers me about Intel, and I really don't know this company, except that everybody who comes on this show is bullish on Intel. Now, you try to be a contrarian. That ain't being a contrarian, Peter.
Well, it's not in one way, but it is in another, Jim, because this stock was materially higher only a few months ago. Many of the momentum players in the market have begun to exit the stock. So I think more value-oriented players are coming into the stock.
What's the best stock that you would buy now? The market's going to open weak on Monday, apparently. What is the best stock that you would be buying?
I'd focus on technology. I would focus on Intel. I would focus on Cisco. I would think about Motorola. I think Compaq represents a tremendous buy. The airlines are attractive. Consumer cyclicals, even the autos, I think, are very, very attractive. And finally, the banks. The banks are attractive.
You're going to be very busy on Monday.
Oh, yes. All I need is cash, but I'm fully invested, so I have a bit of a problem.
We will all be busy on Monday. We'll take a break here. Time to put your 2 cents in, okay? We'll give you a chance to talk to Peter Anderson tonight from IDS Financial Services, 800-752-CNBC. Back in a moment.
This is CNBC.
This program is sponsored by MasterCard. MasterCard, official sponsor of the 1994 World Cup.
Here's the thing. It's a credit card. It won't bring the world together. Actually, maybe it will. I mean, MasterCard is an official sponsor of the 1994 World Cup. So soccer fans from all over will be coming to America to cheer and eat too many jumbo dogs. And since no card on the planet is more useful, they can all use their MasterCards for hotels and car rentals and silly hats. And nothing brings people together like silly hats. So I guess MasterCard will bring the world together. Wow, I hope there's enough parking. MasterCard, it's more than a credit card, it's smart money.
To think in terms of a key that adjusts the driver's seat and mirrors when you open the door. To create an airbag designed with children in mind, as well as adults. To pioneer the big things and reinvent the small. To To go beyond the expected, to the enlightened. That's the soul of Audi.
In the competition among balanced mutual funds, only one can be first. Only one balanced fund ranks first for the past 5 years. Only one balanced fund ranks first for the past 10 years. Only one. CGM Mutual Fund, a flexible no-load fund managed continuously since 1981 by Ken Hebner. For a prospectus, call 1-800-CGM-INFO. CGM Mutual Fund, America's #1 balanced fund.
You know you need life insurance to protect the family you love. We know the way things go, it's hard to find the money to pay the premiums. You know you've got to do it, and we know we can help you. To protect your family's future security, many financial advisors recommend insurance coverage equal to 5 times your annual income. Wait, before you say, I can't afford that, look into this money-saving offer from Garden State Life Insurance. If you're in good health and don't smoke cigarettes, Garden State Life can offer you quality term life insurance that may save you as much as 50% off what you're paying for term life insurance protection. Garden State Life guarantees your premiums remain the same for 8, 10, even 20 years to come. So if you need $25,000 to $1 million or more of quality life insurance protection, call today, 800-253-2300 for this free information package and confidential coverage proposal. Garden State Life Insurance, 800-253-2300, 253-2300.
What is a good investment in the way of tax-frees? Whether they be utilities or maybe it's even a good idea to invest in U.S. Treasuries. So, I want advice as to where I can get the best interest rate.
And what kind of questions do you have on your mind? We'll take your calls now for Peter Anderson. He's the Senior Vice President of Investments at IDS Financial Services in Minneapolis, which, as Peter just told us, is celebrating its 100th anniversary this weekend. Incredible. Let's go to Leon in New York. Good evening.
Hi, I'd like to get your thoughts, please, on commodities, in particular the grains, corn, soybeans, and your thoughts on how to play them in the equity markets.
Okay, well, I'm going to dodge around the grains, but I will give you some thoughts on commodities. First of all, I think commodity prices, particularly in the metals and energy area, will be advancing. That includes aluminum, that includes particularly copper, which I think looks in terrific shape in terms of supply and demand. How can you play commodities, or at least the metals? Well, a Phelps Dodge, I think, makes a lot of sense. Cypress Minerals makes sense. I believe energy prices are going up. Some of the smaller energy companies, I think, again, make sense in terms of how you play it in the marketplace. Grains are a factor of weather. It's dry in some parts of the Middle West, wet in others. I'd be a little uneasy about giving you advice on grains.
I would too, Leon, but just one point I would make. The stockpiles of grains in the world are at the lowest level they've been since 1972. So if there is rain or a problem, then conceivably we could have serious disruptions in the grain market. That's not advice. It's just stating a fact.
That just makes them that much more price volatile.
Leon, if I were going to pick a single metal, I believe it would be copper. Focus on copper.
As obviously it's an industrial play, but that must reflect your view of the economy as well.
Yes, I look for a strong economy. I anticipate shortages in the copper. Inventories are coming down, and prices already are moving up sharply.
So that's your best commodity play?
That's my best commodity play.
To Clay in Georgia. Good evening, Clay.
Good evening. I'd like to ask Mr. Anderson how much lower he thinks the market will go this year in '94, and also ask Jimmy, given the fact that we'll have the Clinton administration in '95, if he agrees with your guest projection for '95.
Well, let me start off with where we think the market's going in the near term. Then I'm going to have to ask my associates here what the previous guest said. First, in terms of where the market is going, I think we should find a bottom both in the bond and the stock markets here shortly. Over the next, I hope, the next few days, certainly the next few weeks. Maybe 3,600 on the Dow, maybe 3,550. Then I think we will wallow for much of the summer. I think we will end the year, the fourth quarter will end the year on a very, very strong note. And believe it or not, I think for the year we will be up 10 to 15% on a total rate of return basis. At the moment, on a total rate of return basis, we're down on the order of 3 or 4%. So that means we likely can move to the upside by a total of maybe 15, 18%.
So that's almost a new high for the stock
It will be a
market.
new high. I think on the Dow we will go to 4,200.
Did I read correctly?
By year end.
You don't feel that the Fed will be raising interest rates the rest of the year?
No, our official forecast is the Fed will raise twice more. We will have Fed funds a little over 5%. But if there's a surprise, I think the surprise will be that the Fed stands still over the next month or two and does nothing.
Well, Clay also asked about 1995. He asked me about 1995, but I'm going to ask you, since it's your show. How do you see 1995?
I think 1995 is going to look very similar to 1994. A lot of churning. I think you'll make money, but I don't think they're going to be big numbers.
Okay.
To Jeff in Texas, good evening.
Good evening, gentlemen. I have one comment and one question for Mr. Anderson. First, my comment. I've never seen as much bear bashing since the heydays of the Fishbeck brothers. That's my comment, and I'm using that as a contrarian indicator. And secondarily, Mr. Anderson, since you have a large portfolio of assets, are you using or do you anticipate using hedging by short selling currency futures due to overseas investments? That is, that are dollar denominated, obviously, on their part.
Just to expand that, do you use derivatives of any kind?
Number one, on the question of hedging foreign currencies, yes, we will periodically hedge foreign currencies. At the moment, and in the last few days, clearly we've not been right on this. We feel pretty good about the dollar, so we are not hedging the dollar. But we have periodically hedged currencies, certainly to protect our investments overseas. Do we use the derivatives in general? Yes, we do.
You do?
We will be long futures contracts to hedge against large cash positions. We will also write puts and calls against individual stocks.
What kind of futures do you use? You buy S&P futures? I mean, stock market futures?
Correct. Right. S&P 500 futures.
Right, and I mean, this is in your prospectus, and all your investors obviously know that.
Yes.
Right?
Whatever happened to the Fishbeck brothers, anyway? Let's,
I think they're bulls now.
Yes, I think so, too, as a matter of fact. Mike in Virginia, good evening. Hello, Mike.
Well, I'll ask the question for Mike. Mike says, what should he put his money in a money market fund now? Because he's in his 30s, and there's another person who wanted to know he's in his 50s. They both want to know, should they put their money in money market funds now?
Jim, my answer to that question is definitely Mike should not. His age dictates to me that he ought to be taking more risk. Money market fund at this juncture makes no sense to me whatsoever. I think it should have heavy exposure to common stocks, some exposure to bonds, and believe it or not, some exposure, I think, even to junk bonds, significant exposure to international, and no cash.
Well, if your view of the markets is correct, and the market is going to go up another 15% by the end of the year, nobody should have money market funds. They should be cleaning them. You have money market funds, don't you?
Yes, we do.
Do you call up all the IDS money market fund holders and get out of money market funds?
Well, if you remember that pie chart we had up on the screen a moment ago, we only have 9% of our assets, our customers' assets in money market funds. So we, relative to others in the business, we have very, very small exposure to cash.
I noticed you said foreign assets. I was told today by Charles Biederman out on the West Coast that money's been coming out of foreign funds. Is that your experience?
Not in our funds. We continue to experience fairly strong cash flow, positive cash flow.
Yeah, I would think that with the dollar going down, I was surprised at that report, because I would think with the dollar going down, people would be putting their money into foreign funds.
If you look at performance from most international funds so far this year, the performance has been about the best you'll find in any major section of the equity mutual fund industry. Now, if that changes, then I think you can get significant outflows, but not yet.
Right, but you aren't seeing that at this point.
We are not seeing that. We are still seeing cash inflows.
Oh, okay.
Let's go at this point. Peter, nice to see you. Thanks for joining us.
Thank you,
Happy anniversary to IDS
Jim,
this weekend.
thank you.
Safe trip back to Minneapolis. Peter Anderson with us tonight, Senior Vice President at IDS Investment Financial Services based in Minneapolis, Minnesota. Don't forget to join us Monday night. Nick Whitridge, he's the portfolio manager of the Babson Value Fund. He'll be with us. He's a contrarian who likes to hold on to a stock for a very long time. Year to date, his fund ranks 10th among growth and income funds according to Lipper, and over the past 12 months, it's number 1. Plus, is it wise to buy a fund with little or no track record? We'll answer that question with Sheldon Jacobs. He's the editor of the No Load Fund Investor. Monday night, right here on Your Portfolio. Let's plug a couple of books, shall we? It's out, right?
My book will be in the bookstores in August, not until August, but it's called Investment Biker on the Road with Jim Rogers, but your book is out.
And in fact, I'll be signing copies for those of you in the Tri-States area tomorrow at the Encore Bookstore in Fort Lee, New Jersey. Call the bookstore for directions. I have no idea how to get there.
That's it for tonight, folks. Thanks for joining us.
I'm Bill Griffith.
And I'm Jim Rogers. See you next week.
Good night.
is CNBC.
Fellow travelers, life's a journey. Our friends and colleagues, lovers and loved ones, is it all part of a bigger picture? What connects us to each other? Well, Mobile Link. Only cellular service that has Mobile Link makes it easy to connect with everyone, no matter where you are on that cosmic interstate, even if you don't know where you are.
Make sure your local cellular service has Mobile Link. Call 800-995-4000.
I am anxious to have taxes reduced.
I favor a reduction of income taxes.
Tax reduction is urgently needed.
I believe we can cut taxes substantially.
What presidents promise, Dreyfus delivers. And now Dreyfus brings you intermediate tax-exempt bond funds. High current yields with added stability. Plus, the income you earn is free of federal tax. Consider a hypothetical tax-exempt yield of 4.7%. In the 31% federal tax bracket, a 4.7% tax-free yield is the equivalent of a 6.81% taxable yield. In the highest federal tax bracket, a 4.7% tax-free yield is the equivalent of a 7.78% taxable yield. And if you live in these states, Dreyfus has intermediate bond funds tailored for you, free of federal and state income taxes. Call 1-800-621-5291.